Welcome back to the monthly portfolio update. I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Thursday, August 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses, so please be careful since it's your responsibility to do your own research before investing. At the end of the video, in the bonus section, I'll be sharing some of my rules and tips for investing. This is part 2 of this type of video, so if you haven't already, please check out part 1 in the link from the pinned comment. But that is for later. Now let's look at the monthly activity. In July, I continue buying a little bit of UiPath when they announced 10% layoffs in their workforce. It's funny, when other tech companies announced layoffs like Google and Meta, the price went significantly up due to future savings. But when UiPath did it, the price dropped 7% from an already small base. The difference is if you do it from a place of power or weakness, as decided by revenues and earnings. On a note, let me know if you want me to do some deep dives in specific companies, mostly those that I own or are on my short watch list, since those I know the most about. Like UiPath biggest risk right now might be their automation robots being replaced by GPTs, recent changes in management, stuff like that. What is basically my outlook for the company. Anyways, I also bought some more gold and a little bit of Bitcoin. My self-imposed 6-month limit expired on July 10th, which didn't really matter since I also bought some during the past 6 months for the outside money portfolio. And also earned some more free altcoins. In terms of cash flow, I got some small dividends from my S&P 500 index, the second quarter dividend, and from Rongas and One United Properties. Cash flow this month was abysmal, but I already have a big, maybe too big, cash position, but I feel inclined a little bit to do some market timing since things seem a bit overheated all over. Now, I'm still mostly invested, but I try to reduce somewhat my risk. Next month, I will also have some of my fixed income maturities, bond and bank deposits, reach their maturity. That being said, the portfolio as of August 1st, 2024 is looking like this. Pause the video if you want to analyze each investment in more detail. As mentioned, the only trades this month were buys, with UiPath at line 29, Bitcoin line 31, and gold line 44 in the Excel file. This being said, the current pyramid allocation portfolio looks something like this. It was a good month with a 1.25% return from a negative 0.1% last month, and year to date I have a 7% return plus my living expenses. The big mover was crypto, which is starting to climb up again. Before going to the next section, if you are interested in the subject matter, you can leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned, in today's bonus section, I will be sharing some of my rules and tips for investing. So, without further ado, let's go. The first tip, but fourth overall, please check out the previous tips and tricks video link in the pinned comment. I'm sure you'll find them useful as well, and best of all, they are also free. So, the tip is to avoid short selling as much as possible. Why? Because it has the asymmetric risk-reward principle, but applied in reverse. Meaning, if you short an asset, let's say Tesla, you can't win more than 100% of the money if they go bankrupt and the stock goes to zero. But you can lose a lot more, technically infinity, if it goes up a lot when, let's say, they have a big hit with robotaxis or Optimus. I know what you're thinking. I can make way more than 100% by using leverage, but leverage is not solving the problem, it actually accentuates it since you expose yourself to a completely different type of risk. If the position goes up against you just a little bit, you might get wiped out even if your overall thesis proves to be right in the end. As usual, all rules have exceptions. Why should it be easy, right? So shorting in some instances makes some sense, like when hedging, or when the short-term bet is sure, like 99% chance of something happening, and then you just have to eat the losses if it doesn't. But don't use it as a bet that tomorrow the stock will go down because you feel that they will report badly this quarter. We've seen a bad earnings report being saved by layoffs and good earnings reports resulting in significant drop in stock price because they estimate problems in the distant future. Next rule is not what you buy, is what you pay for it. There is no asset that is so good that it can be overpriced. Conversely, anything can be a good investment if the price is right. Buy within 10 to 15% of the 52 weeks low because it shows that the price offers some support. This helps having a margin of safety. So tip number 5 is that great businesses are not always great investments, and vice versa. Even great businesses like Google show significant dips regularly. If you look at the 5 years chart, long term, basically it can be 2-3 years, there are significant like 50% drops in price. That is usually the best time to buy. Last but not least, tip number 6. Borrow against your assets. Meaning, if possible, don't sell your assets to cover living expenses. This is what most billionaire founders do. They don't sell stakes in the company too soon, but rather they get personal loans to buy what they want and don't break the compounding of their assets. This is by far my biggest regret because I haven't done more of it when I was an employee. No taxation of unrealized gains is your biggest advantage in investing. It compounds really quickly. But of course, it's easier said than done since you have to sleep well. Some people can't tolerate having loans. Don't overextend and have just loans that can be repaid easily in a worst case scenario. But if you can do this correctly, this is a game changer. Jeff Bezos, Elon Musk, and many others did it super well. If you like these tips, don't forget the part 1 video, and also you can download and check out this completely free PDF document called Investing Rules to see more tips and rules that I have for investing. Some are general, some very technical, and others are psychological. But overall, I think they can make you a better investor, or at least it's good to know about them and consciously decide why you want to ignore that in a particular case. That's all for today. I hope you liked the video. Again, don't forget to like and subscribe. And see you next month. La rivedere!